Hi everyone, happy Wednesday. Today, Irene and I are going to talk about sales tax, and I know it's not a subject that a lot of our clients like, but it's definitely necessary. So, sales tax applies to retail sales of certain tangible personal property and services. And the total sales and use tax rate is 8.875%, which includes New York City local sales and use tax rate of 4.5% and New York State sales and use tax rate of 4%. And if you're registered for sales tax purposes in New York State, you have to file sales and use tax returns quarterly, monthly, or annually, and that really depends on each case. And most of our clients file quarterly. And I know a lot of the complaints I hear from clients is that, wait a minute, why am I giving away so much money? But when you are collecting sales tax, these are not something that you get to keep. You're supposed to submit it to New York State, so it's not yours to keep. And it's important to keep that in mind when you are actually collecting it. It's not to stay in your bank account. I have to say, throughout all the businesses we work with, this is one of the biggest complaints and questions that we get. And I know Irene and I had an interesting case a while ago. It was a mutual client we were working on, and it involved the sales tax issue. And I think it's really important to keep in mind proper ways to file. And I want to defer to Irene to talk more about it.
Yeah, absolutely. So I have actually two examples, and I'll start with the one that we worked on together. The client had come to us after they had purchased a business already, and they had some issues registering for sales tax. And after a lot of investigation and review, it ends up that's because the prior owner did not file their sales tax at all, although had a certificate, and they were under the belief that sales tax is just additional income. So after further investigation and review and having to take a look at the tax returns and having to look at a lot of information, they really did add that in as their income and thought that part belongs to them. And so until all that was resolved, the buyer couldn't actually operate because they couldn't obtain a sales tax certificate. And all of that is just any penalty or any liability is a barrier to obtaining the sales tax certificate, which is really crucial, of course, if you're a retail business or any business subject to collect sales tax. And there's an entire list, and you'd be surprised. And some of my clients are very, very surprised. Jane, I'm sure same with you, who actually ends up on that list because I guess when you open a business, the last thing probably that anyone is thinking about. I did also want to mention that a separate matter, but interesting also about a penalty or a violation that was due, and that was also very much related in that situation. So the client was looking to open up a new business, and because it was a retail business, it would naturally fall under the category of requiring a sales tax certificate. And the business was new. We helped to incorporate it, and so there couldn't be the same issue where any amount of money was actually due because it was a brand new business, and they're denied for their application for sales tax. And so after further review and further investigation with the client and taking a look at their records, calling the accountant and trying to figure out how in the world is this actually possible, we actually find out that there's a penalty due for an unrelated matter to New York State for an unrelated business from many, many years ago, one that really they never even sent collection notices for. So something that very much flew under the radar, but somehow was this block to the client being able to obtain sales tax for the new business. The interesting thing I wanted to add, which I think is a good consideration here, the question came up, may I collect sales tax even if I don't have the sales tax certificate and continue to still operate the business, or do I need to apply for sales tax? And we're not going to, unfortunately, this is a very unique situation in the way that it was done, and certainly I don't want to give that as a global answer, but it was an interesting thought because, and just realization that when you're already in business, you want to start making money, and you want to be able to do whatever it is that you open that business up for, and having that limitation, you're hoping that there's ways around it. Unfortunately, sometimes it's a no. And that's not going to be possible, even if that money is put away the right way. You still will need to apply and be approved first, especially if there's an actual denial. And then there are circumstances, situations where you can do so. But as we have been for all these podcasts that we do and all these conversations, just another warning to be really careful and do full review, keep all the documents. And again, I know we tied this back to business sales, business ownership, but even on a day-to-day basis, just to make sure that everything is accounted for. And if there is any number due, please, just to make sure that everything is all organized and you have everything. And if there ever is a search, you could just submit that right away if necessary. But if there are any
Agreed.
other questions, anything that we can help with, we're always here, and feel free to call or email us.
Thank you.
Thank you.